This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled nearly 2% higher on Monday, recouping some of last week's more than 7% decline. With no let-up of fighting in the Middle East and expected Israeli retaliation on Iran worrying markets about supply from the region. Brent crude futures were up $1.23, or 1.68%, at $74.29 a barrel, while U.S. West Texas Intermediate crude futures were $1.34, or 1.94% higher, at $70.56 a barrel. Brent settled more than 7% lower last week, while WTI lost around 8%. Those were the contract's biggest weekly declines since September 2, due to slowing economic growth in China and falling risk premiums in the Middle East.
The weak position of China's crude oil sector was underlined by September data showing a sixth consecutive monthly drop in refinery processing, leading to nearly 1 million barrels per day of oil being available for storage. China's refineries processed 14.29 million barrels of oil per day of crude in September, up slightly from 13.91 million barrels of oil per day in August, but down 5.4% from the same month in 2023, according to official data released on Friday. The softness in refinery throughput followed earlier data showing crude imports fell 0.6% in September from a year earlier, slipping to 11.07 million barrels of oil per day, the fifth straight month that imports were less than in 2023.
Moving on to the top news in the energy sector.
Singapore's Energy Market Authority, EMA, said on Tuesday it has granted conditional approval to Sun Cable to import 1.75 gigawatt (GW) of clean power from Australia. The conditional approval for the project, which is expected to be operational after 2035, recognizes the technical and commercial viability of the Sun Cable project, the EMA said. Sun Cable will need to update its proposal to demonstrate fulfillment of EMA's required conditions precedent before the project can be considered for an award of conditional license, it said in a statement.
Qatar is finding it hard to agree new deals to supply liquefied natural gas, LNG, to Japan and South Korea as rising competition from the US and elsewhere with more flexible contract terms challenges Doha's decades-old dominance of the market. Qatar was once the top LNG supplier to Japan and South Korea, but buyers are showing preference for supplies from the United States, the United Arab Emirates and Oman. These suppliers all offer shorter-term contracts and unlike Qatar do not restrict the cargo's final destination. This gives buyers flexibility to sell cargoes elsewhere in the future if they no longer need the cargoes. Next, we have the top news in metal markets. The European Union, rushing to develop a €9 million joint purchasing mechanism for critical minerals and energy, is choosing between 8 bidders vying to develop a platform, documents showed and sources with direct knowledge told Reuters. The bloc's rationale for pooling together buying orders is that it would hand participants more leverage to achieve more favorable deals and prices for critical minerals essential for the green transition that trade in thin and opaque markets often dominated by China. The EU aims to sign a contract by the end of the year and start developing sections of the platform for individual products early next year, an EU source who declined to be named told Reuters.
India is exploring ways to import regular supplies of Mongolian coking coal by way of Russia, a senior government official with direct knowledge of the matter said, as New Delhi seeks to avoid over-reliance on transit through China. Mills in India, the world's second biggest producer of crude steel, grappled with volatile Australian supplies of coking coal last year, and the government sent delegations to Mongolia in an effort to diversify sources of the fuel. Despite a longer route, Indian steel companies will now consider importing Mongolian coking coal by way of Russia, said the official, who spoke on condition of anonymity, as the deliberations are not public.
We will now look at the top news in the agricultural sector.
Russian wheat export prices rose last week, in line with the new indicative prices for Russian wheat published for the first time, while export volumes remain high, with analysts expecting record shipments in October. The price of 12.5% protein Russian new crop wheat scheduled free on board, FOB, for delivery in November was $234 per metric ton at the end of last week, up $4, according to Dmitry Rilko, head of the IKAR consultancy. The Sovcom consultancy reported that prices for Russian wheat with the same protein content were $234 to $237 per ton, up from $231 to $233 the previous week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.